Hello, welcome to another edition of Hours and Minutes, where we try to provide hours worth of information in just a few minutes. With me today is Brian Seigel. Brian is BUI's Director of Advanced Planning and a former private practice estate and business planning attorney. So, Brian, I think in the current environment, we're all looking for positives, and interest rates stand out, not only for those who are looking to refinance their homes, but also from an estate planning perspective. Can you touch on a little bit about how is the low interest rate environment can benefit those who are interested in estate planning?
Certainly, Brant. Actually, there is a set of rates that is published by the government every month. It's the applicable federal rate. And basically, it's what's referred to as the rate for an inter-family loan, where if I was going to loan money to my child, then technically I have to have a promissory note. It has to be documented properly. And these are the rates that would be charged where the government's going to say, okay, it's not a gift. It actually is an arm's length transaction. It's a loan. Well, right now, these rates, like many interest rates, of course, are at record lows. There are rates right now that are the short-term rate, which is up to 3 years, is 0.18%. Midterm rate, which is 3 years to 9 years, is 0.43%. And the long-term rate, which is over 9 years, is 1.01%. So these rates are at all-time lows. And again, that creates lots of opportunities in the estate planning world.
In the estate planning world, we've talked in previous editions about the pressures that insurance companies are feeling with this low interest rate environment. But for folks looking to do estate planning, what kind of strategies should they be considering?
Well, one that we are working with a lot right now and getting a lot of questions about is private financing. Not to be confused with premium financing. Private financing is actually different, where if I was going to create an irrevocable trust, and let's say that I was going to use my annual exclusions to gift money into the trust, but I've only got two beneficiaries of the trust, so I can use $15,000 of annual exclusion for each of those beneficiaries, so I can get $30,000 into the trust. Well, what if my premium is $50,000 instead? So if I'm going to gift $50,000 into the trust, then I'm going to have to use part of my lifetime gifting exemption, which is coupled with the estate tax exemption. So the government doesn't care if you give it away during life or at death. You've got a certain amount that you can give away and the government won't tax you. If you go over and above that amount, the government's going to tax you pretty heftily. Well, the idea here is, yes, you can use annual exclusions, but to the extent that there's a deficiency and you'd have to use lifetime exemption, you can instead loan money to the trust and take back a promissory note. And again, this low rate of interest, you could potentially have a 1% loan, 1.01%, long-term loan. So lock in a rate of 1.01%. You're loaning money to the trust. The trustee of the trust can invest those funds, anything in excess of the premium, of course. And the likelihood is that the trustee is going to be able to invest those funds for more than 1%. So you've got this arbitrage that's occurring within the trust as well. So you've got assets growing in the trust. And in addition, you've got this 1% interest that has to be paid. So technically, if there's a client of an advisor who wants to gift $1 million into a trust, well, the better option may be to go ahead and loan the $1 million to the trust, let the trustee invest those funds and pay back that 1% interest each year, which again is going to be pretty nominal. You're talking about $10,000. The client could even gift an additional $15,000 into the trust each year to be able to pay that loan interest. And so it's a great opportunity to be able to get money into the trust without using gifting exemption. So some of the conversations that we're having right now are not even using annual exclusions. It's just a loan of the full amount that would need to go into the trust and not using any gifting exemptions whatsoever.
Wow. So a tremendous amount of leverage.
A lot of leverage, yes.
Very unique opportunity. So what about for the business owner? Are there any unique strategies that will allow a business owner to leverage these interest rates?
There is. And you know, first of all, you could look at it for any client. Potentially having that arbitrage is a big deal. You know, getting money into a trust, and even if it's for 9 years and having a 0.43% rate, chances are, again, you're going to beat that rate. But specifically for business owners, intentionally defective grantor trusts are a hot topic of conversation right now. And that would allow for a business owner to actually sell part of his business interest to a trust in exchange for a promissory note. And again, that promissory note, the rate of interest would be those low rates. And we think long-term, 1.01%. So what happens here is you've got an asset that is appreciating, and on top of that, it's generating income. It is sold to the trust. So it's appreciating and generating income in the trust, not in the estate. What's left in the estate is this promissory note, which is not growing. It's going to stay stagnant. If nothing else, it may even drop in value, because if the trust makes principal payments in addition to the interest payments, then the value of the note in the estate goes down. So it's a tremendous opportunity to remove the value of the asset from the estate and let it grow outside of the estate. And while it's generating income, if there's a need for insurance, that may be a great source of life insurance premiums as well, to use the income that's generated by the business in the trust. It's already there. You don't have to gift anything into the trust then.
Great. Well, that's very helpful information, Brian. Thank you for joining me today. For anybody that may have questions, as you can probably tell, Brian's a very sharp guy and one of the biggest benefits of partnering with BUI. If you have any questions that you'd like to see addressed on Hours and Minutes, please email marketing@buiusa.com. And thank you, Brian, for joining me.